Hey guys, what's up? Welcome back to another video. In this video, I'm going to be talking about a stock that recently announced earnings for the first quarter of 2023, and that stock is Keurig Dr Pepper. And we can see that over the last year, Keurig Dr Pepper is down 14%, while the rest of the market is up 3%. So KDP is underperforming the market at the moment. And so in this video, I'm going to look into some of the recent news that came out surrounding KDP. I'm going to look at their financial statements, and then I'm going to use a discounted cash flow model to figure out the intrinsic value per share for KDP so we can know if this is a good price to buy into the stock from a value investing perspective. And so right here in this article, it's titled Soft Drink Strength Supports Keurig Dr Pepper. They talk a little bit about their earnings results. And for starters, in the first paragraph, they talk about how their unit sales for their beverage business rose 12.7% to $2 billion in the first quarter of 2023, compared to $1.7 billion in the first quarter of 2022. The price increases for their beverages generated 12.5% of the sales growth, while volume increases, in other words, selling more units, contributed to 0.2% of the sales growth. Also, for their refreshment beverages segment, their operating income fell 30% to $490 million from $704 million. And that came primarily as a result of a gain they experienced back in 2022 from some sort of litigation. So that's a one-time write-off event, and that's probably what contributed to that increase in operating profit in 2022, which they don't have in 2023. Then right here, they point out that net income for the first quarter fell 20% to $467 million, down from $585 million, and total revenue for the company increased 9% year over year from $3.07 billion to $3.3 billion. Lastly, their other segment of their business, their coffee business unit, you've probably seen those Keurig coffee makers before, fell 1.3% during the quarter to $931 million from $943 million before. And the price increases for their coffee units generated a 5.3% increase in sales, but that was offset by a 6.6% decline in the amount of coffee business units they actually sold, their volume. So some good news, some bad news for Keurig Dr Pepper. All in all, their bottom line net income declined slightly, but their total revenue for their company increased. Then right here in their income statement, we can get a better look at the financials we just touched upon. We can see year over year, as the article pointed out, revenue increased 9% from $3 billion to $3.35 billion. And then bottom line net income declined from $585 million to $467 million for the first quarters. Then right here, this is their balance sheet. We can see that from December 31st to March 31st, total assets pretty much stayed exactly the same from $51 billion to $51 billion. Then we can see that total equity also stayed pretty much the same from $25 billion to $25 billion. And we can see that their retained earnings increased slightly from $3.5 billion to $3.7 billion. So they do have more cash to redistribute to shareholders if they would like. Then lastly, right here for their cash flow statement, we can see that operating cash flow declined from $600 million to $71 million year over year. And then for their financing activities, we can see they paid out $281 million worth of dividends, up from $265 million year over year. And they also repurchased $231 million of common stock, which is up from no common stock repurchased in the first quarter of 2022. So they are prioritizing returning value back to shareholders a lot more in 2023 than they were in 2022, which is a good sign for shareholders. Then right here, this is a discounted cash flow model to figure out the intrinsic value per share for KDP. They're estimated to grow at 6% for the next 5 years. They have free cash flow of $2.4 billion for their most recent full year, $13 billion of debt on their balance sheet, and 1.4 billion shares outstanding. That estimates their intrinsic value per share to be $13.60 per share, which means that at the moment they're not trading below intrinsic value per share since they're trading at $31 per share. Then on the right hand side here, I compared them to Pepsi and Coca-Cola from a financial ratio perspective. We can see that KDP has the lowest profit margins out of the three companies. They have a 48% gross profit, 10% net profit, and 2% return on assets, compared to Pepsi's Coca-Cola's 57% gross profit and their 22% net profit. Also, KDP is trading at 34 times earnings at the moment. Coca-Cola has the lowest PE ratio at 27 times earnings. They paid out 78 cents per share, but more importantly, the line right underneath that, dividend yield, we can see that KDP has the lowest dividend yield out of the three companies. Basically, for every $100 you invest into KDP, you're getting paid $2.17 per $100 you invest every single year in dividends. Whereas with Coca-Cola, we can see you're getting paid $2.77 for every $100 you invest in the Coca-Cola. So from a financial ratio perspective, it without a doubt seems like Coca-Cola is dominating their competition. They have the highest profit margins, lowest PE ratio, and the highest dividend. KDP, it would definitely not be your pick from a financial ratio perspective across these three companies. And then lastly, I wanted to compare KDP to some of the other companies we've looked at in past videos. We can see for the share price compared to intrinsic value, KDP makes it onto the 10th place spot here. They're trading at 2.33 times their estimated intrinsic value per share of $13.60 per share, and that is good enough to get them onto the table. Right now, Google, GE, Chevron, and ConocoPhillips are the only four companies that are trading below intrinsic value per share. In terms of growth rate, we saw KDP has an estimated growth rate of 6.2%. Not good enough to get them onto the table. ExxonMobil holds the number one spot at 27%. In terms of gross profit, KDP had a 48% gross profit, so that was good enough to get them onto the table. But net profit was only 10%, which is not good enough to get them onto the net profit table. And then for stock performance, over the last 5 years, KDP has returned 65% over the last 5 years. And that actually is good enough to get them onto the 10th place spot. So that would put KDP in 10th place on the table. But it's definitely not as impressive as Tesla's 1,000% return. Also, we can see one of their competitors, Pepsi, is up on this table here at 82% as well. But keep in mind, for KDP and Pepsi, this return over the last 5 years does not take into account the dividend payout. So if you were to include the dividend payout to shareholders, then the return over the last 5 years would be a lot higher. But for this table, I'm only looking at their return for their stock price, and that would be good enough to get KDP into the 10th place spot here. So all in all, compared to the other companies, it looks like they're slightly competitive, but definitely not dominating the pack by any means. Comparing them to the other companies in their industry, it looks like Coca-Cola is doing the best from a financial ratio perspective. And then for their discounted cash flow model, we saw that they are currently not trading below intrinsic value per share. So let me know what you guys think of KDP down in the comment section down below. It's definitely an interesting stock. They have a little bit more diversity in terms of their product line compared to Coca-Cola, which is mainly focused on beverages. So that could be a strength for KDP that differentiates them from their main competitors here outside of their stock performance and their dividend payout. Leave a like on this video, subscribe to the channel, and I'll see everyone in the next one.